All right, stock market. We're going to take a look at that. Before we do, please do read this slide. It tells you about some information about our analytic approach, and it's very important that you do read this. All right, stock market, S&P 500, 1 to 5 week view is really what we're going to look at here. And then I'm going to use the MCM, the market condition monitor, and show you what the best and worst symbols are, what the conditions are right now, because that's so important for understanding the stock market. So you're going to like it. We're going to use the MCM live, and that's really, I think, going to be great information. Let's take a look as we just switch over right now and look at the S&P 500. That's what we're looking at right now is the SPX. I see this chart slipped over a little bit, so let me just get this in here so it's lined up a little better and you'll be able to see these charts. You probably want to see the dates that are on the bottom. Let me just fix that right there. Sometimes this just slips around and I want to make sure that you're seeing the full chart here and all of the numbers. There you go. So what are we looking at here? We're looking at a daily chart. Again, we're always looking at cycle analysis. And let's just take a look here. You can see the very, very pretty symbol cycles that are in there. Remember, cycle brackets are on the bottom. I'll go over what I said last week in a moment, but I want you to again to see the cyclical patterns that are in here. These are the big harmonic families that are right in there, a 52-day dominant cycle. And then there's the intermediate and the minor 13-day cycle that's in there right at that point. And you can see as I zoom in here in this last cycle right in here how that shaped up. Let me just get right in here because this is all important information right up over there. So what we talked about last week was that there was a minor cycle right in here that was bottoming, and it was likely that the pattern was going to be a week up, a couple of weeks down, and then turn up again. That's what we believed. Now, we noted that was a diamond formation right in here, and diamonds are kind of neutral consolidation patterns that we had drawn in there, and that means it could break in either direction. I thought there was a possibility that it would stop over here, complete the diamond, and break on the downside, and not get as much upward intensity as it did right here. But it's proved to be strong as there was tons of buying in the NASDAQ that was leading it to the upside, and that gave you the diamond breakout. Still, what's happening right now is that on the weekly charts, especially in the Russell and in the stocks 50 FEZ, those all have corrective periods right in here. They're likely to pull down. And with the NASDAQ getting so crazy on the upside, that's likely to go into at least a negative relative strength and help the market to move back into a correction. Now, because of the breakout right in here and getting up a little bit into that 4,200 level, which was right now it's 4,207, which we thought would be the level around 4,200 that would be able to stop it. Right now it's 4,208 right now while I'm doing this, and that is an area that should be tough for it here on the upside. So we have, because of this breakout right over here of that pattern in this rising phase right over here, we then upgraded the downside because the time is shorter and it's coming from a higher level. So what we're looking for is a pullback, which we thought would be potentially down over to this level right around 4,000, now pulling back here to around 40.50 or 40.60, and then getting ready where all three of these cycles are moving up again. You see right here where all three were moving up right here, and then the market was strong. That's why you see these projections in here. We all along have talked about later in the summer as when we think the highs for the year would come. Everything that we're looking at is bullish, and I'm going to show you the market condition monitor. You'll be able to see that in just a few minutes, and that is going to, give you a good sense for the conditions that they've been. Here you have the slim ribbon PO on the bottom and the slim ribbon right over here. These are positive and green as they've been right in here. So the upside is not a big surprise to us right in there. We are looking for a corrective period in here and consider this to be a buying opportunity. were that to come. I do believe that it's going to be the NASDAQ that helps lead this correction in here. This is pointing out to around the first week of June. The correction out in the NASDAQ and the FEZ points more to mid-June. So there may be a lot of choppy action right in here and then moving up again. So you can see in here, as I just pull this down a little bit more, that these resistances, this thick zone right over here, takes you, this is around 42.25, and this is around 42.67 right there. So these are all kind of tough spots for it. And then right over here, that major from the weekly at around 43.60 is our most optimistic upside projection that you can see here, with that 4,300 level, which was actually our upside projection for the year. Now, the NASDAQ did make the upside projection already. We were looking for 13.6, and now we have upgraded that, and our members will see those upgrades on the charts that was sent to them this morning for level 4. Level 3 members will also see it posted in there, and even level 2 and level 1 will see those updates also as they come out in the stock index report that Matt does every single day for level 1 members. So you'll see all of that. Again, we've upgraded this. We're still looking for a pullback in there, and then we are looking for this bigger upside out over here right there. Again, last week we said up for a week, down for a couple of weeks, and then up again. That was your up for the week, and a breakout that we saw of that diamond pattern. That was certainly a bullish pattern. And you can see that we have no reason not to still be bullish. So that's a very good look at the stock market, just looking for about a week or week and a half to the downside, a buying opportunity. Now, this is actually very important to look at if you really want to understand what is likely to move in the markets, what's been moving. So watch it. With the market jumping the way it did the last couple of days, I wanted to take a look at the market sectors, the widely held stocks, the ETFs, and of course the indexes, and get a sense for which are the strongest and which are the weakness. And the best way to do this is using our market condition monitor. We're going to take a review here of the widely helds, and you will see the MCM in action. I think this is really important, and you get a great idea of what the conditions of the market is right here. Let's take a look here as we look at this market condition monitor. And right now, what I'm looking at here is the trader version. Now, there are different ways that you could look at this, depending on what trading style that you are. And you see this is set to short term, and it could be intermediate or near term or intraday, depending on what you want to look at. I specifically want to look at the short term because what that looks at is the algorithms based on weekly, daily, and 2-hour charts, because this is the kind of swing trader type of setup, and also for option traders. So I think it's very important. What I want you to see right over here, as we're looking at the short term, you can see the SPY, the QQQ, the IWM, the DIA, and those, of course, have been bullish. And the QQQ turned very bullish from bullish back on May 15th. And the SPY went from bullish to very bullish also on May 17th. So they were bullish, they went to very bullish. And even the IWM now has turned to bullish, and that was neutral and even bearish a while again. And you can see the Dow Jones is a laggard right in there. What I want to do is really look at what the strength and weakness is, and I think this will give you a good idea. And over to right here is the change log. And every time in this particular trader style, something changes in the 114 symbols that are in here, in these widely held and ETFs and commodity ETFs, that changes here, and you see that on the right. So this is just a great tool. What what I want to do is I want to look at these trade setup conditions right in here, right there, and I'm going to click on that. We're going to take a look at what the most bullish are, and I'll just scroll down through here and you'll get an idea. So there's I'm going to switch to where it says only very bullish, and you can see in there Apple, Uber, IYT, transportations, SPY, Netflix, XHB. Those are the ones that are very bullish condition right now. Visa, Toll, CRM, UAL, Microsoft, Amazon, Micron, big leader on the upside with NVIDIA, and you can see that. And they were bullish and turned to very bullish 3 days ago on May 15th. Really good indications there. XLK, Meta, QQQ, XLC, the communications, Google, Oracle, and EWJ. Those are the ones that are in very bullish condition right there. And they, a lot of them have been there for a while. You could see Google turned very bullish on May 9th, Oracle very bullish on May 8th. So these things have been bullish, and some of them went from bullish to very bullish, as you can see. Let's take a look at the ones that are in bearish, very bearish condition. As you can see, there's wheat. We've been really negative on wheat. We showed that in the commodities in Future Speak all the time. And of course, the oil CVX is very bearish. T-Mobile, that's very bearish also. And of course, the golds have turned down. You see Newmont very bearish, corn very bearish. Amgen looking very bearish. We'll keep scrolling down. You see the market's moving up, but everything isn't very bullish. This happens to be the bond market, TLT, and that has now turned very bearish. Pfizer and soybeans, which we've been reporting as very bearish. Also, you see GLD right over there, gold, is bearish, and that turned bearish actually today from neutral condition, actually yesterday, 518. So that gives you a great idea of how you can really use this and get a great sense of the condition of the market. So that's what you can look at. Another way to do it is you can look at the time frame version right over here, and you can see that you can look at 2-hour or monthly all the way down to 3 minutes right there. And we'll just stay on the daily chart right over here, looking at the daily time frames, and you can see right in there that IWM is neutral. That has improved there, and see that Dow Jones is still bearish on the short term right over there. So, and you can go all the way down in here and see the condition of every one of these. If I click on SPY, which is something we all want to see, then it shows you each of the different time frames in there, and you can see that that's on the weekly turned bullish on April 4th at that point, and that's when it turned green, the daily on May 5th there, and then the reversals got caught up on May 17th, and the 2-hour, 15-minute, and then all the way down to the 3-minute in here. So if you were a really short-term trader, you would then be using the 3-minute, the 15-minute, really be helpful. So this is just a great tool, and you can see how important it is to really understand the conditions of the market. Again, I'm going to go back to the trader version right over here, and then you can just pick the style of trader that you are. If you happen to be a very short-term swing trader, you're going to use the near-term information, and you can see in here that on a near term, the stock market was bullish and very bullish throughout the near term, which would be, just several days type swing trade that you might be doing. So good idea. This is a good example of how to really use this market condition monitor and really have a great sense for the condition of the market. I hope that you found that valuable and that you actually decide that you'd like to use the market condition monitor. And for those of you that have it already and haven't been using it, that gives you an idea of the value of it and how you can be using it. That is the MCM, the market condition monitor, only available at askSlim.com. You get a great sense now for the market condition monitor and the conditions in those groups, and how this has really helped to understand what was going to be leading on the upside there. So that's the MCM, and make sure you have the opportunity to use this MCM on your own. Become a level 4 member, and you're going to be able to get this for free, the market condition monitor for the next 3 months. And we won't be charged again for that, for the market condition monitor, because that is free. There's no strings attached to that at all. If you do subscribe to level 4, that will have a renewal on there. But you will then be able to cancel it if you don't want to stay or you want to downgrade from there. So there's lots of opportunities for you. We're very flexible with that. So do take advantage of this great special that we have coming, that we have right now. Go to askSlim.com and click Learn More up on the top, and you'll get all the information. You get everything in levels 4, 3, 2, and 1. It's the most information you will ever see from a trading website. Fantastic. And my team does an amazing job. And all we care about is you doing better. Your success is our success.